You are being fed a lie, and most don't even know it. Everyone's blaming tariff. It's Trump trade war, it's a China policy, a wrong diagnosis. Bitcoin struck under $90,000 not because of tariff tantrum, but because smart money saw the truth long before headlines did. So let's strip away the noise and expose what's actually holding back Bitcoin. Trade war spooks, Bitcoin dips. Sounds logical, right? That's the surface level thinking. Bitcoin didn't fail because of China's import tax. Let's be brutally honest. It was already underperforming way before the first tariff even touched the spreadsheet. Check this, from December to early March, Bitcoin couldn't break past $100,000. Not even once, even with the ETF buzz and bullish sentiments. You can't blame a broken engine on the rain. The market was gasping already. Tariffs, they were just the gust that knocked over the house over hype. Now let's talk about something more painful than FOMO. Misplaced faith. The Trump Bitcoin narrative. Remember the noise? Strategic stockpile. The idea that the US government would start buying Bitcoin like it stocks oil. It infected the entire social media. Influencers dropped hints daily, and hedge funds started front-running a dream. And then in March, the executive order drops. It's ruthless. No buying, no treasury commitments, just pure noise. That's a gut punch. Market momentum was riding on fiction, like a startup hyped on leaked fundraising, only to find out it's friends and family money. When reality surfaced, the floor cracked. Here's where the data slaps. While retail traders cried about tariffs, institutions were filling their bags. Spot Bitcoin ETFs pulled in $2.75 billion in just 3 weeks after the tariff drama kicked in. Now, does this add up? Unless you understand the game. Investors were not reacting to tariffs. They were thinking 2 steps ahead. Fed policy, future supply constraints, and relative yield compression. Retail panicked and smart money scooped. This did. This is classic. Let's stop pretending macros doesn't matter anymore. Inflation's dropping. February recorded just 2.5 PCE in the US. It's of Europe even lower, and that's not a good news for crypto. Not now. Bitcoin's narrative, digital gold, chaos hedge, store of value in a reckless monetary era. But what if Fed cuts rate while inflation is stabilizing? Where do you think the capital flows? Risk on? Not really. And to stack it all, February's job openings near a 4-year low. Labor softening fast. Money is rushing into short-term T-bills and money markets. Even stablecoins are seeing rotations into yield on cash protocols. Bitcoin gets sidelined not because it failed, but because other assets just look safer right now. Now let's boil this down. Inflation is softening, hedging appetite will fall. Hiring slowing, risk tolerance will drop. ETF buzz waning, volume thinning, and Bitcoin stockpile, fiction exposed. Now ask, why are people still obsessing over tariffs? Because it's easier than facing this market's structural fatigue. Because blaming Trump is less painful than admitting, and the entire market expectations were built on wishful thinking. Bitcoin is not losing steam due to import tax. It's adjusting to macro reality, monetization expectations, and a maturing capital framework, which is obvious and a right thing for Bitcoin. Maybe the problem's not Bitcoin. Maybe it's what people keep projecting onto Bitcoin. Neither it's a political tool nor a magical inflation hedge. It's an asset, a mirror. And what it's reflecting right now is fear, misplaced optimism, shaky conviction. So what should you focus on if you're serious about surviving this cycle? Watch treasury yields, dissect actual inflation beyond narratives, track ETF flows, not tweets, and monitor global rate policies, not meme coins. If this breakdown cuts through the noise for you, hit like, stay subscribed, and drop a comment. Stay sharper, the market's only getting smarter. This was Kush.